Hello, everybody. Happy Tuesday. I believe it's a Tuesday. Yes, it is. Tuesday it is. This is Patrick, aka PC0813, here to give you guys a little bit of analysis. I see we have some complaints about the thumbnail. Nothing I can do about that. You see this face? Yeah, it's bad. So that's as good as it's going to get. So I apologize. Yunus is the king. Yeah, dude, he crushes trades. Absolute beast. Got a lot of beast at the lounge. But the reason for today's public video is been seeing a lot of chatter, people putting their capital towards Doge. I don't really know if people know if they're just buying the speculation. I've been involved in some speculative pumps on Dogecoin before. Me and Dukes made a killing over the summer on one. And you know, they're lucrative. There's time to chase them. There's time to fade them. And what I really want to make sure that you guys have the information. If you're in a Doge position, you know what to be looking for. I'm going to go over that with you. And we're going to go over how we find these premium trades on these assets, because it's really actually very simple. I guarantee you I'm going to get some comments today here. Oh, this is just really simple TA. I've seen it before. And guess what? These are right here for you because it works. It can be extremely simple, and I don't care how simple it is. If it works, I'm going to keep using it. So let's go over my extremely simple TA. Let's go with Dogecoin, and we're going to start from the beginning, very locally. So Dogecoin, we want to start with our current impulse. So simple. If you have any knowledge of my volume technique, you can say, man, this is a textbook case of how to trade this. If not, imagine using volume levels like a range, where if it accepts from one, you take it to the next level, so on and so forth. In this particular instance, we take the volume pull from the high of on Dogecoin down to our low that we made at the beginning of January. This level has been sitting waiting for us since January 3rd. Just have to be patient for it. Now, when that actually came over the weekend, that was a kind of a second trigger for me to hop in there. We also, on the daily time frame, had a perpendicular Bollinger Band. It was not going with the movement. If it's congruent with the movement, you don't want to fade that. It's probably going to keep pumping. We'll show that on Bitcoin, how it's playing out right now. But using this one level in a Bollinger Band from my phone, we took a nice, easy short. 0.89 right below our level here, waited for the rejection, didn't snipe the tippy top high, didn't need to. Got over a 15% drop just for coming out and saying hi. So that's the power of this kind of, I've shown the examples, like altcoins especially, you can just take one level and crush these things if you are patient for them. Another level, if you guys know, I love trend-based fib extensions when price starts trending. If we potentially are putting in a trending environment on Doge, beautiful little support location, beautiful support location. And then we go ahead and compare that with our current impulse up right now. We'll just go ahead and take that live. Fixed range from low to high right here. So what I'm looking for at this particular moment with daily close is, I believe if Dogecoin can close below this level, 0.07, it's called a bunch of sevens, 0.77777777, the volume principles tell us that if this level is lost, and this is what we have to see, close below, and then tomorrow we come up, we hold the back test, continue down, this low will be taken out. That is what the volume principles that I have developed over years dictate. It has given us an accurate reading on Bitcoin recently. As a reminder, this is pretty simple analysis, right? Our old range on Bitcoin, and all I did was put some 0.25 fibs over the range because it plays out quite well with high time frame ranges. And I remember in a lot of public videos, I gave you guys a key level. It was based off the exact same principle. Let's go ahead and take this here. Let's mark it. That was our key level. And I remember specifically, it gave us tested, rejected, rotated around, rejected, and this is when I was telling the lounge, I have screenshots to prove it, do not fight this move. This is time to stop fighting this level. This resistance has broken, And if the value area high of this impulse from high to low, if that value area high gets claimed, the volume principles dictate this high is going to be taken out. And guess what we did recently? We took it out. These things are tried and true. I have back tested them more than you could imagine. So just want to give you a brief example of where those principles came from. They work extremely well on altcoins, but again, Bitcoin high time frame, they work just as well. Work just as well. Now, what are we looking at below? If we keep dumping, and we do take out this low. Well, we already saw one level, the 618, but I'm not a huge fan of using fibs alone. The reason being, it's just a measurement. It's like taking a ruler and putting it up to your screen and being like, I'm trading off that because it went 2/3 of an inch. No, I don't trade based off of measurements. If it happens to line up with some volume-based levels, then I like it. Then I like it. So let's go ahead and take a look. Let's get rid of our current impulse. We know that level. Let's take a look at what we have below. Let's get rid of this as well. Boom. So our previous uncleared impulse, and what I mean by uncleared is that we have not retraced this low, right? We've retraced down to here. We'll go over that, but this is an uncleared impulse. Hence, these levels are still very valid to me. Like this pull, this data is still very valid. We came down, did a sharp drop. And again, the beauty of this volume analysis is that once the impulse is complete, you have your levels. You had this level ever since December 11th. And all it is that we mark out value areas, inefficiencies, and in some cases, high volume nodes. And also have what's called a ledge. A ledge is when you have an area of high volume that leads directly into an area of low volume. And for me, if I'm looking for ledges, I like to take the deepest one inside the value area, right here. This is the deepest ledge that we have. Mark that out. It's pinpoint. Like it's not too difficult to see. But this is interesting where we are right now. We're accepting beneath this impulse value area high, which tells me level to level trading. The next level down, if we lose the value area high, is point of control. Have it marked out, it's an SFP level. I could see a good reaction happening from there. Maybe not the reaction, but a good reaction. And then we take our trend-based fibs on. We want to wick through it. It'd be a nice area to tap, but it's a nice general area, honestly, right around this POC that I would be looking for to take additional profits. If we start to bounce, I will jump into a hedge long, not expecting it to run unless this is claimed. It's very simple. It's a bunch of if-then scenarios. And then we have, more importantly, to the downside, you got 6.5 cents. 6.5 cents. If that gets broken, again, same volume principles tell us this low will be taken out. I've already examined the low of these wicks. If this gets taken out, even if it bounces from like in this area, these are going to get taken out. Promise you, we're going to head to new lows on Doge if we lose 6.5 cents. That is our bearish trigger level. Extremely simplistic. I mean, all we're really doing is looking at volume pull from here to here, and then again from here to here, and recording the levels. That's all we're really doing. It's a very simplistic way of trading. It's very stress-free. And like I've shown you with altcoins, you can get some fairly pinpoint entries. And then last but not least, so I think that anybody who just tells you to look at one side is doing you a disservice. I do have a slight bias to the downside on Dogecoin, mainly because of the news, right? People buying based on news, I could see them getting flushed out. But I've got to look in the mirror and say, hey, you've got a bias, PC. You need to go ahead and look at the other side. What's the flip side of this scenario? The bullish case. Okay, fair enough. Let's go ahead and take a look at the bullish case because we got to be ready for it, right? What if some crazy pump does happen? I want to be prepared for it. So all we do, quite simply, boom. If our same area that was resistance becomes support, we look to trade to the highs with 2 take profits before then. Very simple. From here up to our point of control for 2.5. And again, up to value area high for 5.5. After that, you let it run, looking for the 19% gain to take out the highs, you leave some running. You don't close your position because we do what's called scaling out. Scaling out is when, I mean, everyone knows what a take profit is, right? Goes up, you hit a take profit. But if, let's just say price does this. Let's just say, for example, come up, we back test it, bam, I'm entering along, TP1, TP2, back test it, I may compound. We take the highs. So, and I take a big old profit right here. Let's just say, for example, I have 50% of my position running. If price starts to retrace, I will then take another volume pull, low to high, get the value area, POC, value area levels, and see how price reacts to that. Lose the value area high, I'll scale out some. So it's like a take profit in reverse. And what it does, it allows you the flexibility to let your winners run, being comfortable that if it comes back to you, you know what your trigger levels are to scale out and grab some more profits. So it's not going to pump 30% and then hit your entry and you get nothing out of it, or you get 2 take profits and that's it. You'll take profits on the way up. When it's showing, you let it run if it's showing strength, but if it starts to show weakness, we take profits on the way down. Simple stuff. Really is. So this is our trigger level to the upside, would be 9 cents. To the downside, we've already talked about that. We've got our bearish trigger down below at 6.5 cents. And everything in between that is just a bunch of fucking noise. I'm being honest with you. It's just noise. It's just a bunch of, I mean, you can sit here and do this all at once. Come around, rotate back and forth for 15 minutes. I don't care. This is where it matters. This is where it matters. And when you have the confidence to know where it matters, that's when you can take these trades stress-free. Stress-free. So yeah, I'm going to ask you guys if you like this kind of information, this volume-based analysis. It's very simple. It's very simplistic. It just takes practice. Give us a like, more importantly, give me a comment. Let me know what you guys are looking for, and then I'll dig into Bitcoin next. Just want to make sure this is what you guys are looking to see and hoping what you're looking for today. But I see nothing. And one thing I also want to point out on Dogecoin. So we had a decent hourly, I'm giving this away a little bit, right? We had a decent hourly bounce on Bitcoin. Didn't even make it up to a resistance level that I would consider important. So extremely weak thus far. But we didn't really get that bounce on Doge, did we? Doesn't surprise me. Again, the news, a lot of people entered on that news, and it's ripe for a liquidity grab to the downside. So I would be extremely careful with your longs on Doge. If anything, we would want to take our current impulse high to low and look for retraces to perhaps get into a short ride with the trend. I've been telling everyone in our group for weeks now with Bitcoin, ride the trend, stop fighting it. If you want to take a scalp, right? I used to be a scalper. I lived and died off scalps. I get it. I get how fun it can be. But once I've graduated to advanced trading, this is where the money is. This is where the money is. Everything else in between is just noise. So real quick, I know we have roughly 2,500 new YouTube subscribers since we did our last public video. I won't make this long, guys. I'm not going to make this salesy, I promise. Just show you guys who we are, what we do real quick. So we do run a live trading group where we teach our techniques, and we also go over everything that we're seeing. Bitcoin, high time frame, low time frame. We chart more alts than you've ever heard of. One thing we're going to do a little later today, some live alt charting. This is a concept we've been doing in the lounge for many, many months now. Personally, one of my favorites because our members give me assets that I would have never heard of if they hadn't told me. And then we turn around a week from then and get like a 15% pump from the level that we live charted. Everyone's happy. Wouldn't have happened without these live charting sessions. Stocks and Forex. So I am actually going to be starting up a friends and family fund very, very soon, where I do know I'm going to be personally going to have to be heavily involved with stocks, indexes, Forex, commodities, everything, just because I know it's going to be what a lot of my investors want. But again, we do delve heavily into the stocks and Forex end. We are not just talking at you. These are coach-only post channels that we've shown this far, but we have areas where we're answering your questions. You have questions about our technique, like about my volume pulls, I'll give you a detailed answer. That's what we're here for. Members, we have our own place for members to post everything they want. Honestly, guys, they're turning into some studs. We're going to have, I mean, some really profitable traders extremely soon. Digging into our techniques in more detail, we have a number of forums. Again, so it's a plethora of information. It's a lot when you get in there, but we help you navigate it. We'll show you where everything is. And look at our general chat. How many of y'all seen a general chat in a trading group where it's filled with gifs and nonsense? And there's me. That just called me out. But our members are serious, guys. Like, they're very, very serious in helping themselves grow as traders. I'm going to tell you all right now that trading is not easy. We're not here to tell you that it's easy. This is a simplistic technique, requires practice, requires a lot of refinement and understanding of the information. But we will teach you how to do it. That's what we're here for, is to teach you what we know and give you the gift of financial freedom that we have. All righty. That's my sales pitch. Let me drink a little sip of water here. Yeah, drink your water, hurry the fuck up. Ain't nobody come on YouTube to watch you drink water, motherfucker. All right, let's dig into Bitcoin. So we talked about our volume principles, right? I wanted to show that last pull to give you a prime example of how these things work and work very well. So first things first, you knew I'm looking to short above this high because of my volume principles. I know that high has to be taken out. So let's go ahead and get this off the chart. Let's pull up. No, not our current short. I'll get into that a little bit. Local long. No, we've got our local. So everyone's seen this, right? Our local channel that we put in deviated to the top side, deviated to the downside. We don't know if this is a deviation yet. We don't know if we're going to have a matching deviation here and a matching deviation there. Entirely plausible. We're going to go over that in just a second because I have that all prepped and ready for you guys. Let's go into, yeah, so this was our swing short plan based upon our volume principles. Now, I'm not going to lie, be 100% honest with you guys. We're transparent. My entry on it got front run by a hair, and I do mean a hair. But I do have local triggers that I've shown in the lounge. 1 hour, 15 minutes, low time frame volume analysis that do help me get into these trades. They help me get into high time frame trades. Thus, I mean, we kicked the shit out of it. I'm not gonna mince words. Sniped the damn high. I've taken 3 take profits total. 1, just in case it was a scalp. 2 at range low. 1 when we were down here, and then 1 at range low. Because that sharp move down, I wasn't entirely sure we weren't going to get a sharp move back up. I had to prepare for it. My preparation's taking profits. So I've taken 3 take profits on this. Now, the idea behind this short, let's get rid of this guy. We don't need you anymore. The idea behind this short is, again, extremely simple. But go ahead and knock me for simple TA. It works. It works. Now, we have a very clear high time frame range, right? Extremely well respected, nice midpoint. We've put in a channel near the midpoint of the range, really revolving around this high volume node. Now, this is a historical high volume node, mind you, coming from this range. So it was still very well respected throughout this range. So it stays on the charts. But all I'm looking for is a little bit of a drop down to our range lows, essentially giving us a partial range rotation, right? Try to break in the range, rejected. No, we're in the range, hooray, rejected. And we bust through, hit the range midpoint. Let's give ourselves a partial rotation. And from there is where that's going to be the next area of the major area of interest. So that is my long area. That's what I've had, again, planned for over a month now. This is what I'm waiting for, 27, 28K. And I said this from the onset, I'm more comfortable trading this, especially up to here, if the high time frame short idea plays out first, because I wanted to see the partial range rotation. I knew we had to take this out. And then we're rejecting off the 0.5. It's when you look at it just zoomed out, it's very, very simple, right? It takes all that low time frame nonsense out of the mix. Our range that we put in, look what we did for today's high. I would call that a range back test, wouldn't you? Right? Now can't necessarily, like I said, we can't rule out a deviation yet because we do have some areas of interest. And again, these have been planned since early December, but this 0.25 of the range was fantastic resistance on the way up, gave us a number of good shorts, broken through, was never retested. So this is going to be treated one of two ways. Now we're coming down into it. We're looking for a bounce, a reaction. That's where we're looking from. I don't necessarily think it'll be the low, but there's two ways you can treat this level, which is roughly right here at 37.7, 37.5, 37.7. If we slice through this area with no reaction, take the small loss, and this is good. I've learned this over the years here. If you're good at identifying areas of interest, slice through, take your loss because it will come back up, it will retest it, and that's when you can catch your short. I know it sounds simple. It requires patience because when you take the loss, you want to hop right back in, right? You want to make that loss back up. If you wait for that level to be revisited, that's when you will get your loss, the amount that you lost, you get it right back. I don't mind taking losses at areas of interest because I know I can trade that level in the reverse direction when revisited. Happens 9 times out of 10 if you can accurately mark out these levels. But what we're looking at here, let's go ahead and grab ourselves a nice low to high volume pull. Very easy, low. No, can we get it right high? I'll go ahead and dial it in a little cleaner, get it right on the high. Oh, come on. I'm doing surgery here. Beautiful. Okay. So first potential support is our high volume node right behind our 0.25. Fairly logical, right? Support. Well, I'm sorry, was resistance. We're looking for, even if it's on the 15-minute or hourly chart, like a little bounce. And if it gets tapped twice, I'm not trading it twice. Trading it once. I'm not, because a rug pull, I'm going to say this, like I've said in the lounge a million times, a rug pull is on the table. A rug pull down to 27.28. We could rug pull down to 27.28K and still be bullish, believe it or not. I'll go over that, but that's entirely possible. So you got to beware that scenario that we could just yank this, slice through all these, and still be bullish. How could that happen, you say? Well, first of all, let's go over our areas of interest. So if the high volume node over our previous resistance turn into support, we have this beautiful looking volume gap right below, and this is the point of control of this little grind up right here. Now, this is a little trickier one. This is an area where I can see it wicking down to here, 34,650. This is a daily level, like a daily zone. Price can wick through here all at once. I'll probably hedge if we get a daily close back above here, within it or back above. Then I would trade this level, right? If then and only then. I would take profits there in the short, take profits every leg down. You'd be a fool not to. But this is where, I mean, if we can come below, come back up, this is a pretty major area. If you break below here, this is incoming. It's the same way, I didn't show this, but I actually got a little bit of a Doge long. At this point right here, when I saw that price is slicing up, I'm like, we're heading to this value area low. The daily Bollinger Band was there. I had no doubt in my mind, and I chased along, closed the entire thing right up here. This is a similar area where when you break below here, I'm sorry, let me get the price range up here. Price range, I fully expect us to continue on down to this value area high to test this. Massive inefficiency right here, massive. You break below here and hold, you're heading down here. Those are just facts, you know. Again, you've got an if-then scenario, you break it, that's happening. That's not an if-then scenario, that's going to happen. And again, it's a value area high. I would expect a reaction from there, hence a scalp long with potential. But you get down that low without tapping the range lows that we busted through and haven't really retested. Got our point of control. Looks nice. That looks really nice. And when we take this from two different perspectives, so you can say there's really two different impulses on the daily. And again, this is half data, half art. You have to learn how to read the chart without any tools on it. I can see myself, there's two impulses. You've got the big one, the easy one, low to high, not hard to figure out. You also have this one, low to high, because this low broke market structure. Therefore, this is the start of a local high time frame impulse. There's two poles we can take here on the daily. Low to high, simple, and then taking this start of a new impulse pull. Just like that. So it's a little bit of data to work with. Yeah, that is where you can see right here. We found temporary support on this value area high. Was calling this out in the lounge. I'm like, I wouldn't be shocked if we get a small bounce and down from here. We didn't even retest this high volume node, which again, I'm going to show you this. This high volume node's from like years ago. This isn't a current high volume node. Look what we have on it though. It's a current high volume node now. But this is why I said, if you guys want to know what's going to happen today, tomorrow, go back and look in the past, because that's where the good data comes from. That's where your good levels come from. Now, this is how we get down here is extremely important. Let me get these local long levels off. Keep this on. So there's two routes we could do to get down here. Route A is the rug pull. Now, the rug pull, I would be more likely to put a bigger long on it, because you give me a sharp move down, I'm inclined to think we're going to get a sharp move back up. Now, whether that is just something like this and then trickles on down, right? It heads down, or we claim it. If you claim this 0.25, I think we're going to be taking out the range. We're going to be taking out these highs. Fully expect that. But this right here, that is what's going to tell us. We get the drop. That's what's going to tell us whether we're going to head to new highs or whether we're going to make new, let's call them high time frame local lows. Because new lows is going to be all the way down here. May not get that, but I would expect these lows to be taken out at 15K. So, I mean, it's all about, you guys have seen me put it on Twitter, like the data's still developing. This is exactly what I mean. I don't have the data from this drop yet. It's developing. When I get it, I will take a volume pull of this. I will have trigger levels to watch, and I can update everyone all along the way. But for now, we go off the data we have. And yeah, like our social media manager, I didn't ask him to put this on there. I mentioned it in the meeting, but I did the math. If we get down here, this is $1 million short for me. 100%. I slapped this thing heavy, I slapped it hard, and I used my data to not get scared out of closing a bunch of it right here. You know, I've only taken 3 take profits, encompassing 25% of my total position. So that's what I'm looking at on the high time frames locally. It's just as simple, it's the same thing. Same thing, guys. SR level, right? Local SR level from our low to high pull. Look where we topped out at on Friday. Look where our last high was, to the damn dollar. It's simple, I'll give you that. You can knock me for being simple, but it works. So right now, we simply take our high to low local pull. We're looking to, price can't get up here and keeps making new lows. It's weak, weaker than weak. All we do is continue to update our pull. Bam, bring in the new low when we make a new low. For now, we sit and wait. For those of you who are into fibs, it lines up. You'd be shocked how often that order block data, fib data, let me go ahead and throw the 0.32 on here. This makes total sense, right? If we're going to reject from the 382, from a fib perspective, we're bullish. From a value area low perspective, bearish. From a value area low perspective, we're bearish. So this, yeah, you reject from here, price is weak, we're going to make new lows. You claim it, you can trade it up to here. If then scenarios, I don't trade this. If it goes up here, I don't care about this. This is low probability. Don't give a flying fuck about it. What I care about is the reaction or the reclamation of that level. You claim it? Yeah, I'll get into a little hedge, ride it up, because now I'm hedged. Now I got my short, and I got my long, and whatever wins, wins. I don't care. In the end, that's what we try to teach, is getting yourself hedged as best as possible. Get a long, get a short at the right locations. Just see which one wins. It's as stress-free as it goes. But the two local resistances I'm seeing are right above 39.9 up to around 40K. Resistance A, I think this will be temporary resistance, but not something I think you'd be wanting to hang on to a short from. Your golden pocket here. I think you get a, let's do this, boom, boom, claims it, comes up, rejection, comes up, grinds back up, hits it, and then falls down. I think that's a much more likely route than rejecting from here. Yeah, knock out a good majority of the shorts that entered. If we're going to, again, it's an if-then scenario. If we end up claiming this, I'm looking up here. And conversely, if this level gets claimed, I'm going to scale out a small bit of my short because I would expect higher levels from there. A move where then that means we're back within our range here. And then I could expect to move up to at least value area high, get above value area high. The data's changed. The data has changed if we reclaim this level again. And I'll react to it accordingly. But right now, it's telling me that it looks weak. Price is weak. Until this is reclaimed, it's going to stay weak. Going to stay weak. So that's a good question. When do I consider a level claimed or lost? And for me, it's time. Time in trading can be your best friend. It can be your worst enemy, right? How many times have you guys, you're sitting out there and you've gotten the level right? Like, let's just say we're looking to long down here. We get the rug pull. Price wicks through here, hits our stop loss, boom, 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 takes off. And you're thinking, son of a bitch, this is what I wanted to buy. It hit my stop loss. I can't stand this. You got in on the front side of the drop. You got in early. I hate getting in early on these trades. I'd rather get in late. If we do this, boom, I would rather enter here as opposed to here. Exact same level, different point in the rotation. A lot of you guys are going to have to get that in your head. Do not get the front side of the rotation. Try to get the back side, right? This is where you want to enter. Requires patience, but what I like to see is a candle close, preferably with an increase in volume, breaking through my area of interest. And then the next day, like this is, again, an area of interest for me, this range low, because I took profit there. Perfect bounce, perfect bounce, perfect bounce, perfect tap. That's a back test. That's something you could look to kind of jump the gun on, short this back test and put your stop loss literally right above the high, because we want to keep our risk as small as possible. So when a level has been broken through, again, preferably with an increase in volume, you get the close, breaking the level, it needs to hold the next candle back test. If it does, I consider it claimed or lost, and you get the follow through. So right here, close below, back tested, wick through, but held it, test, test, on this value area high, drop. So it takes time to really, and you can take this, and this, I actually got this question earlier today, you can take this from different time frames. You can see on the 1 hour, this drop doesn't really register on the daily. You kind of have to take it on the 1 hour. But with that, we have to know these are 1 hour levels. They have to be treated as scalps. We can't be smashing them like we can these levels. They're not daily levels. This, you could have smashed this short heavily. It's a daily level. This one, you got to scalp it and see if it runs. Quick take profits, secure the win with the stop loss, see if it runs. So one thing I will say, guys, if you missed a short, and I'm seeing some people here that did, you're going to have other opportunities. Don't freak out. There's always other opportunities. However, you got to remember that if you do get into an opportunity, you're mid-impulse. So this is something I remind our members about constantly, that you have to realize that if you get into a short right now, you are shorting the bottom of a 20% drop. Do you really want to hang your hat on shorting the bottom of a 20% drop? Scalp it? Sure. Looking for weakness for continuation? Sure. If I hit TP1 and then it breaks my entry and starts going up, am I going to fight it every single level of the way up? No, I'm going to wait for a nice retracement, wait for my pre-planned levels, and watch the reactions. Stay patient. Stay patient. All righty, guys. Let's see. 21 likes. You're going to have to pump those up if we want to do some live charting. Yeah. I'll get the live charting. I'll get it ready. Yeah, this is honestly where I have the most fun. You guys give me the asset. We have a bot that's running in the YouTube chat. So when I put the timer up, here's what you have to do. First of all, we got to pump up the likes because 21 is just way too low. But once I put the timer up, you put an asset in the chat. I need three things: the asset, the exchange. Where do you want me to chart it? You want Binance, you want Bybit, you want Femex, you want Coinbase, what do you want? And then I need the pair. Do you want spot or do you want swap? Because a lot of people want spot because they're looking to buy spot, and you chart that differently. You chart it with longs and TPs. You're not looking to short spot because you can't. So let's go ahead and one more time now. Asset, exchange, and then the pair type, spot or perp, because if you don't put those in, you won't be in the raffle, okay? So let's go ahead and pop the timer on. Let's get some music going. If I was an elevator attendant, this is what I would be having all day. Just nice little elevator music. Ooh, injective. I've done that one before. See if that gets picked. I made a grip on injective. Two, one. Alrighty. Now the bot is going to probably, it's going to shoot me a little message and tell me who won. So we'll wait and see. We usually have this in Discord. And also, when I'm talking, the music should be lowering. If you guys can't hear my voice when the music's going, just let me know. I'll lower it on my end. Alrighty. ICP to USDT, Bybit, perp. Fuck yeah, I love this one. Love this one. Have a good track record with this one. But we're going to go ahead and keep the music on. Bybit. No, not spot. I want .p. Perp. Take it off, put it back on. I want all my old stuff gone. Now, real quick, before I keep going, the way that we typically live chart alts is, I'm going to say the same thing I did to our members. The point here is to give you the best high probability levels that we can. It's not to give you the route. Like, I wish I was good at Elliott waves. I wish I was Yunez, and I can tell you the ABC, the FYG, WXY, LMNOP, get all those fucking rotations in there. What I can give you guys are levels where they tapped, I can give you alert levels. When they're tapped, high probability of reactions. When they hit, you need to take 3 take profits. 1%, 2%, 5%. Everyone in the group who does this swears by it and thanks me for telling them to do this. So, free lesson, when these levels hit, 1%, 2%, 5%, let it run. And then use TA to find the rest of your TPs. But I just want to let you kind of give you a little preface since we haven't done this public before. All I'm looking at is this impulse compared to the range you put up here, same damn value area. And you notice it has this nice rounded volume profile. Could look good for a drop. It means it's proper distribution of volume. Clear to the dollar. That's money right there. That is money. We got another one right below it. More locally. That's a massive high volume node. Massive. Edge. Clear that. I want to see it to later. position, can run to the highs. Cool. I usually pause it when I'm ready to review it. I think I got a pretty good grip on this. I don't really need to dig into the 4 hour for this. Daily does just fine for me. First off, I love how this inefficiency pocket was clean pretty much to the dollar. Cleared this thing out. When we take our high to low impulse pull, we could look for a potential scalp here. Again, it's not as high probability as I want. This is more like a 60, 70% trade. These are more like the 80, 85% that we want to wait for. So you could mark out this 23.65 as a level. I'm not going to, but let's do this. Let's do this. Let's just mark it accordingly. I love putting notes in my alerts. Only trade this level if an impulsive low bottoms out here. So if we get like a wick like this, you know, like some kind of impulsive wick, bam, that clears this thing and stops there to the dollar, sure, I'll chase it for a quick little 125 scalp. It's reactionary, but there's a reason to take it there. From there, we look for a simple scalp long with potential. Now, this one down here, 21.43, this is the one you want to see hold. Let me just take a look here. The bat's slightly invalidated, but anyhow. This is the one you'd want to see hold if we're hoping for new highs. That's the level you want to see. You'd want to see this entire area. I basically marked it from our value area high down to this ledge right here. You see this little, I could see a wick just slicing through this on a single pull and then coming right back up. So I would, you know, bouncing like right here or something like that. So this little entire zone is what I would look for. And you can treat this one of two ways. If you're a high time frame trader, you can treat this as one large zone. If you are a low time frame trader, which I am, I trade high time frame levels, but I do it with a low time frame mindset. I'll treat this as a level. I'll treat that as a level. That way, if we bounce from here, boom, I caught and run. I caught the scalp. If we do something like this, boom, I get quick profits on scalp one and are hard on scalp two. So it's just your preference of how you want to trade a zone like that. I personally, again, treat it as two different zones. And then if we get down to the point of control, these massive high volume nodes, you go on my Twitter page, go back and look at, which one was it? Which one was it? It was just like this, where the high volume node was so massive. I'm like, just buy the point of control. It's going to give you a reaction, which I can't remember. It was from like a couple weeks ago, but I'm expecting a similar reaction there, where we basically take a nice rotation, an inter-impulse value area rotation from a massive point of control high volume node, bounce it on up, especially if this gets sliced through. You know, it's not a huge return. It's 25%. It's a good little bounce. And the beauty of it is that your stop loss is minimal because it's a daily level. You can enter this trade twice if you wanted to. It's a scalp long level. This is not this, right? This is not that. This is all altcoins. You got to know how to trade them. Damn near everything's a scalp till it's not. Damn near everything is. Now, this is one I think has the potential, if we bounce from here, we get a little bit more running. But this just basically, again, point of control to value area high. I'll go ahead and put this for context. Leave 25% running, right? Because if we claim this value area high, then what are we looking for? Very simplistically, we're looking for the high of that impulse to be taken out. Nice move back up, so leave a little bit running. To the upside, to the upside, to the upside. Now, we're basically right on this local bearish trigger level. Now, I love this one because it uses the old eye. People don't use the eyeball test the right way. They say something looks like it's about to go down. Something looks like it's about to go up. So I'm going to hop in. I'm going to try and go with it. I don't use the eyeball test that way. I use it this way, where if I can eyeball something from right to left and say that's an SR level, I love it. Now, all I did was take the low before our local impulse up on the daily. It's a more local look at this impulse. Our value area high just look at this from right to left. I mean, obviously support, but look right here. I mean, it's a nice level, and we're battling with it right now. So I would watch daily close in conjunction with our local bearish trigger level. Let's check out our volume here. Do we have any kind of an increase in volume, which tells me if you guys are feeling aggressive. Now, this is an aggressive short. You have to keep this in mind, not one I'm going to be taking, but it's something you can take. If we close like around here, 30.90, 31, something like that, and we get the move up, back test this tomorrow, that's your short. That's your short to take. We got to starting to get an increase in volume down here. Break through it, back test it. Yeah, I could easily see that short. That's the local short, but this is kind of a high time frame chart. So let's put that on here. Put it with our bearish context. Let's go ahead. Oh, shiddle. You know what I'll do? Just easier. This here, I'm gonna just put our notes. I gotta put notes on here, otherwise I forget. Very forgetful person. So if daily close below the bearish trigger level, look for back test short scalp. Put that with big capital letters. It's a scalp. It's a mid-range trade on a pumping alt. It's a scalp, right? You guys just gotta know that. If it's mid-range, if it's not a sniper, it's a scalp on altcoins. The sooner you get that through your head, the more profitable you'll be. So that's short one, would be close below here and just get a nice little back test. Normally, I would say let's short here, but this is a 4 days of clean back testing. I mean, this is a very clean, obvious level. Could get a reaction there, but it's been back tested so many times. I like the idea, again, of heading up to a nice high volume node. It's not like there's a close high volume node. There's not a close second here. This point of control, by and away, is the biggest high volume node in this profile. So I would expect the reaction there. Simple little trade, run it down to the value area low. So almost 6%, but again, it gives you, in my opinion, I'd take a 2, 5, and target TPs. Let like 25% run. I always let something run. It's just, why not? Let your winners run. And then we can scalp short with potential here. Actually, let me go ahead and rephrase this. This is a first touch scalp short. First touch. I do not want y'all trading this if it hits more than once. First touch scalp short with potential, because then if it's claimed, don't fight it, right? You get up here and claim this thing, ride it to the highs. It's an over a 9% move. High probability if this is claimed. Very high probability that will take the highs. So again, the point is not to get, squeeze profits out of every aspect of every rotation. It's to look for these high probability ones, wait for the shot. Wait and see what price action is fitting. What scenario is it fitting? I've got levels prepped to the downside. I've got them prepped to the upside. Now we can just wait. Wait, be patient, and just like in real trading, move on to the next one. So I will, what I'll do is I'll post this on my Twitter page once I'm done. I'll just post this chart as is. You kind of have to see the video to understand it, but since you're watching, you'll get it. But just so you guys have these levels, I'll post these on my Twitter page when we're done. Cool. If you guys have any questions, let me know. Otherwise, let me see how many likes we got working with here. 77. I'm not going to ask for many. Give me 3 more. 3 more. Go slap somebody on the back of the head and tell them to hit the like button. Just 3 people do that, I'll move on to the next one. That's all we got to do. Let's get our music back on. There yet? 78. Come on now, I know we can get it 2 more. Just 2. 79. Until then, you're just gonna watch me dance. And 84. Well, more than enough. Thank you guys for going above and beyond. All righty. Put the timer out. Put my timer out. Boom. Timer's up. Put your assets in. Let's see what we got. What are we doing? You're putting your asset that you want live charted in the chat. If you want any live, if you don't have one, sit back and relax. All righty. Timer's up. Give it a couple seconds. We got a member, Data, who, again, we do this a couple times a month, and we have a bot that runs in Discord. I swear to you all, he has gotten picked every single time except two. We're talking dozens and dozens of sessions. He's here. He's in here. Surprised you hadn't hacked this and turned everybody off. All right, we have IOTX USD Coinbase Spot. Very nice, very nice. This is something I may want to get in myself. Let's take a look. IOTX USD Coinbase Spot. Beautiful. Beautiful. All right, let's get some music. Let's get the jams going. Where'd our music go? There it goes. All righty. Which history we got on here? Enough. Beautiful. Don't you love that? Ah, it's so beautiful. All right. Right? You can see that. It's perfect. That's these altcoins, man. If you just mark your levels, you wait for them. There we go. All right, let's keep going. Well, actually, I'm going to pause it for this question. This is an important question. So I got a question here. Do I only take the pulse from high to low? No. I also look at ranges. However, everyone looks at ranges. Everybody looks at the ranges. You will get more useful data from impulses than you will ranges. Ranges is good, like, for confirmation of my impulse data. Range, you can use that range data. But yeah, it's either high to low or start of an impulse to low. And we're starting at a higher low. A good example would be like, a perfect example here. So you could take, sorry for stopping this. I got to explain this. It's important. You could start here. And this is the exact same thing I did with Doge. You could take this pull, but this little mini range right here is going to skew that volume profile. It's not really what I want to see. What I want to see is the impulse. That's what gives me my valuable data. So in that aspect, I would probably start right here, right when the impulse started, to get this crap out of the mix. So it's like, what we could see would be like, we have an impulse that starts, ends, and then another one starts, and then ends all the way up there. So you can see, like, this is kind of crap you don't really want with your impulse data. So just a little bit of insight there into how we look at it. Yeah, I answered that question earlier. Exact start to low, high to low. Starting point. Now, you guys are going to get a little crash course. You don't know what this means, but the loungers do. That little green outline is affecting my OCD, something terrible. All right. There we go. Okay. Yeah, there we go. Now the world can turn again. It looks like it's going to keep dropping. Not going to lie. Not going to lie. Looks like it's going to keep dropping. Ledge to ledge. That's beautiful. Wow. Easy. Big one, here to here. Yep. Same damn thing. Let's look up. Same thing if claim traded up. I'm laughing at ZF's comment right now. That's pretty good. Like it. All right, as my man Dukes would say, done and dusted. Done and dusted. First off, the very first pull I took, the very first one. I mean, this is just a thing of beauty, right? If I didn't convince you that this strategy and technique works, hopefully this did. High to low, one perfect short, two perfect shorts. That's ridiculous. I mean, I'm kind of pissed that we didn't do this like 2 weeks ago. So I could have had this asset. I would have had this marked out, and we all would have shorted this together. Kind of irritates me a little bit, but no big deal. Let's get rid of that. All right, so where are we now? We bounced back and forth between a confirmation zone that we had as of January 8th. You could tell, I could have told you then, if you gave me this asset then, we would have probably had some ranging between these 2 points. It's a confirmation zone. You get bouncing between confirmation zones. You don't know what it is? Come check us out. I'll explain you more. But the value area high of our previous impulse, and remember where I told you guys, from this where it started, not necessarily the low, that's just the end of this impulse. The beginning of this one is where it starts, right here. Our value area high, we have found fairly good support on that, right? Up until today. Up until yesterday's daily close. Shot down daily close, that's a bearish sign. Back tested, not holding. Like again, if this is closed down here, I think we're going to be heading down. I would look for local shorts. I don't think you'll get this again, personally. I think you'll get probably a small little wick up and then down if we do head down. But if we do head down without heading up, we'll start there and then we'll go to the top side. So what we always have to do, chart to the bottom, chart at the top, see what fits, and we're ready to go. Nice and easy. So we have this real nice inefficiency pocket leading up to the high volume node. I do not think this is way too obvious of a level. Way too obvious. Everyone's going to pull it, because you know what? People see this range, and that's what people do. This is a fixed range volume pull. Let me pull it across the range. Oh, this is going to be easy. It's going to be such a good, easy level. Fuck that shit. It don't work that way. It ain't that easy. You got to look for the hidden data. And it'll front run that level, probably slice through it down here to the volume gap. That is a beautiful looking level. Beautiful. It's an extremely deep inefficiency, creating a V shape in the volume profile near the point of control. Yeah, you're going to get a reaction there. Again, these are really just hedge long areas. I don't really have confidence that any of them will run until you get down to the actual POC down here. And even then, I like the idea of riding it up to this ledge right here. Basically, the idea being, let's keep it nice and simple. This is an area of interest, right? A lot of people are looking at this. People are thinking it's automatically going to offer a scalp long. Could just do this. Boom, up to that POC, back down, and we're looking to basically, again, retest this area of interest. That's all we're looking to do. You don't put these targets that are just way out of reach, you know, that have a very low probability of hitting. Put something on there that's plausible. And then, per usual, 25% running. Shh. Ancient Chinese secret. Let your winners run. But honestly, that's all you really have to do. Just take it as a scalp, a couple quick TPs, stop loss at entry after TP1. You get the target, let it run. And then if you're riding a short from up here and a long from down here, do you really care which way it's going to break? I don't. That's why I don't get invested in these altcoins, like the overall direction, because the way I look at them is, all right, I'm going to try and get short from up here. I'm going to try and get long from down here. It comes up, it's doing this. I don't care about any of this crap. It means nothing to me. Absolutely nothing. I'm just waiting for a winner to show itself. Then to the downside, if we flip that POC, because we have the value area low so far down in the volume profile, you flip that value area, I'm sorry, point of control, it's going to slice through value area low. It's going to take out the lows for a 30% drop. So that'd be a nice back test short we could take, slice through here. You know, you get a rise, comes back below, back test it, and then we draw that out for you. Boom, let's just say it slices through everything, back test, come down, short it to the lows. That's kind of what I'm thinking. It's a very plausible route with little undulations, you know, small little bounces, small little bounces, small. So I draw these out. So if you want to make some profits, some paper profits off these small bounces, you know where to do it. Me, I'll just wait for this because then I'll slap it hard. And then when I get my 5% TP, that'll be 5 pigs profit for me. Just like that. Just like that. So that's to the downside. To the upside, let's just say we get a pump. We close above value area high. We have an SFP level right above the value area. We have this point of control right above the value area low. So if we get, again, first touch scalp short, kind of the same thing we had in our last asset. If it kind of impulsively tops out at this area, then I would trade it. Then I would trade it. It can't grind up into it, right? And by grinding, it can't do this. Boom, 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 boom. Then I'm probably not trading this. I'm waiting for this. Boom, boom. And I'm catching my back test. If it grinds up into it. Now, if we get an impulsive move, let's just say we shoot up tomorrow, back test, shoot up the next day, bam. And it all happens like in a day or two. Yeah, I'd short that. And if we close back below here, we're probably just going to chop within here, exit it to the downside. So we have an SFP level. I don't really like any shorts above that, just being honest with you. I think this was the perfect short location. I don't even think it's not a high probability we're going to get that, to be honest with you. I think just because of where we got, what, a little over 3 hours left in the day. Take a look at Bitcoin. Unless Bitcoin can push back up into this channel by day's end, I don't see that happening, but anything can happen. Developing data, right? We got to wait for daily close, but it's not likely. So the more likely route here is down, but we got to be prepared. We do have a liquidity grab to the upside, and I'm not shorting this. It's just too high up. It's too high up. There's nothing but wicks up here in this one massive candle that came right back down. There's the volume profile doesn't look horrible in this drop. It doesn't look great, but it doesn't look horrible. Like it's somewhat rounded. So like, I don't know. The only part of the volume profile that looks nasty is down here below the point of control. So retracing this makes total sense. Retracing this makes less sense. It just does, just from a volume perspective. This seems a lot more likely to be resistance than this, just based upon the data and the pattern it's putting in. And then if our one and only short resistance is claimed, take it up to value area high. And you guys know what I'm going to put right now, right? Ancient Chinese secret. Do 25% running. And that's when, you guys, you hit your take profit, you start going to new highs, and we all get to pull the big earn, Yeah. You get those snipers, you get an entry, but it's not magic. It's just letting your trades run. It's just identifying areas of interest, taking the highest probability shots as possible, even though it's going to require some patience. It is going to require some patience. So let's see. Why wouldn't I consider the high volume node below the IE? Ooh, good question. It's because it's the point of control of this range right here. And I think any Tom, Dick, and Harry can identify this range and do this. I don't like levels that a lot of people see and can easily find. Bam. High volume node is this POC. I don't like that. It's too obvious for me. If it gives a reaction, I'm fine missing that trade. I could give a rat's ass, to be honest with you. That's another thing you guys got to get in the mentality of. Price either is going to fit my plan and do what I want, or I don't touch it. And I could care less if it doesn't do what I want. I just won't touch it. He comes up here and hangs out in the confirmation zone for 2 years. I won't trade it. It's either my plan or nothing. You got to have that confidence in your data to be able to say that, because a lot of times you're just scared to miss the trade. No, this is the low. No, this is the low. This is the low. This is the low. Do I often avoid trading? So when I say obvious, what I realize is obvious to me is not obvious for a lot of people. This was obvious to me, was not obvious to a lot of people. And this is honestly the one biggest challenge. I'm just being real with you guys. This is kind of what we like to talk. We talk about a lot of trading psychology stuff, graduating from beginner to intermediate, then intermediate to advanced traders. And you still struggle with stuff as an advanced trader. And you honestly touched on the one thing that I have a little bit of trouble with is like, I outthink myself sometimes. I'm like, this is obvious. Is it obvious to me because I've seen this data 50 million times? Or is it really truly obvious and like everyone sees this? To me, this is an obvious level. Like everyone can see this range and take out this impulsive low. It just looks, I don't know, it just looks obvious to me. And let's talk about risk reward as well. Let's say we get a reaction from there. I believe that your best probability is going to be right back into the inefficiency pocket. 6%. I mean, that's the best possible you can do. And in my mind, if there's an element of risk to this, 6% ain't worth the reward. It's just not worth it. You know, it's not a big enough reward to basically what I think is going to happen is just take all of this liquidity in one fell swoop. Boom. Wick it down to here or here. So you could get a reaction there. You know, I'm not saying like it won't happen. It's just not one that I like to trade. And for, again, multiple reasons. The location of this high volume node, I think a lot of people will put more value on this than this, even though they should be putting more value on this little mini range. But this is bigger, it's longer, it encompasses more area. People can just see it. It's closer. You know, psychologically, people will want to trade it because they can trade it sooner. And people like taking trades now. I want it now. I don't want to wait for it, I want it now. And one thing I've repeated a million times over, the work that y'all do today, the levels that y'all prepare today should not benefit you today, probably shouldn't benefit you tomorrow. They should benefit you a week from now, a month from now, 3 months from now. If you do enough of this, they're hitting every week. Your alerts are going off. You're like, oh, I remember this guy charted 5 months ago. Here we go. Hop into the opera. Got my notes here. You know, that way I don't have to go back and remember. All my notes are in the alert. But this is what I'm seeing on IOTX. Yeah. A lot of experience. A lot of experience. You know, it's like anything else. It's repetition, muscle memory. People, if you guys get nervous when you're hitting the button to enter a trade, like if you feel your heart beating, it's obviously psychological, but it's something that can be overcome with simple repetition. That's why we tell people, take 50, 100 $1 trades. Not because we think it's going to refine your trading technique in 50 or 100 trades. It's going to take more than that. But you get the repetition to get over those psychological hurdles. You get comfortable entering, and you're okay with the loss because you know you can use, in my case, I know I can usually back test the levels from which I took a loss from and make them right back up again. It's pretty simple stuff. Anyway, guys, I have kept you on for over an hour now. I appreciate all your time and attention. You gave me a couple good assets to chart. And like I said, thank you so much because these help y'all just as much as they help me. I trade these, I put the alerts on these, and I will react when they're hit. So this data is tried and true. As a reminder, everybody, everything that we discussed is for entertainment and educational purposes only. All trades and profits discussed were mind-breaking trades and earth-shattering profits. Thank you all for your time and attention. We'll do some more public content soon. Hope you guys enjoyed it, and I will catch you all here shortly. Take care.